business. Now, focus on the returns on your money without worrying about the return of your money. For over 30 years, Brokers Alliance has maintained one of the largest inventories of guaranteed and tax-advantaged products in the country and serves a nationwide network of financial professionals. Call 1-800-290-7226 or email thequest@brokersalliance.com. And remember, when you need financial guidance, call Brokers Alliance.
Well, welcome back to the Quest for Financial Freedom. I'm your host, Steve Savant. And of course, with me today, my guest on the Quest, Eric Palmer, one of our top guns in annuity expertise across the nation. You can email me at my email address, thequest@brokersalliance.com, or call us toll free, 1-800-290-7226. That's 1-800-290-7226. Now we're talking about back again after market value adjusted annuities. And if your head says, Steve, I'm trying to put this all together, 1 year, 3 year, 5 year, 7 year, 10 year, if you want to call us or actually write, because then I can give you an attachment. If you write me, thequest@brokersalliance.com, we'll send you all the market value adjusted comparison sheets. You can look for yourself, surrenders, what they pay you out, everything else. You can kind of look at this. But now we're going to do a little something different now. We're going to take a little twist and go back in time because there's not too many of these left, but there's still enough to talk about it. Let's talk about now guaranteed rates, which are a little different than market value adjusted. Give me the yin and the yang, kind of like the tale of two cities.
There's two types of products we find right now. There's the fixed annuity, which is very similar to what we've talked about here, the multi-year guarantee, but it does not carry an MVA or a market value adjustment. We're going to find the interest rate to be considerably lower than the market value annuities. And again, that feature exists so that the insurance company can provide better rates for the clients. But there are for example, there's a 5-year annuity with Principal. Principal's a very strong company. We see the commercials all the time with the blue triangle.
Yes, and I'll be charging them for that little 30 seconds.
I'm working up the tab here for them. But that product provides a no MVA option. And your interest rate's going to be in the 1.25, 1.5 type range. But there's no chance of a variation there. So if you walk early, minus the surrender penalty, you will not have an adjusted rate. And so if you want to count on the rate that you're purchasing and have no ifs, ands, or buts about it, those products are available with strong companies like Principal.
Well, I'm sorry. Do you have a lot of traction on this? Because that rate's not really something to write home to mother about.
Believe it or not, we do. And there's two reasons. First of all, the product is providing the ability to truly guarantee the interest rate that you're working with. And it also provides a feature that we call return of premium. Return of premium means that if I give you $100,000 today and 2 years from now I decide to walk away, I'm guaranteed my principal back no matter what. And
even in surrender charges?
Even with the surrender charge into consideration, I can actually get my original principal back. I won't get any of the gains. But in some instances, that surrender might be larger than the gains I've earned. So instead of walking away with less than what I started with, this contract guarantees a full return of premium, which means I'm going to get what I started with.
And that's including, I want to make sure I hear this straight and our listeners hear it, without any surrender hits.
You got it.
Okay, well, now, so if that kind of, I'm trying to compare it to the first segment show. I'm sitting at 4.25 and I just went down to 1.25.
Right.
I just lost 3% crediting rate. So, but you kind of get a little. This is a little bit different. And is that you're saying that 1.25 to 1.5? Is that what's the shortest term on a number like that?
5 years.
5 years. So
5 years.
So 5 years. So I guess I would not be really interested in an MVA at that kind of rate, but maybe guaranteed, because then I know my principal's in a lock, even if I wanted to walk.
Right. I find that, I'll give you an example. We come across developers or builders a lot, especially in the state of Arizona. Liquidity is a big issue, and sometimes you may think that 5 years is a good round number, and that's a good time for your investment horizon, but you might have an unexpected liquidity event, and that's what these types of products provide, is that little bit of foundation that no matter what, you're going to get your money back. And I think that if it's specifically what we're trying to do for the planning, it's a great product to work with.
So that flexibility of well, actually, it's inflexible, but I'm living with the worst scenario, which is I get my money back at any one time, and that is already incorporating in my thinking any surrender charges that the annuity would have. Now, you were telling me earlier, off air, that these annuities, these just regular guaranteed rate annuities, are really they're standing in the shadow of these market value adjusted annuities. There are not that many around anymore.
There's really not. Most of the annuity products we come across have a market value adjustment feature, and it's typically the same length of time as the surrender in the contract itself. And the reason is that it allows the annuity to be more competitive. It provides the ability for the insurance company to provide a stronger rate because they're protecting themselves with a market value adjustment. So you talk about the give and the take. You know, for the higher interest rates, you carry this MVA option, which could again be good or bad for the client in terms of what the rate is applied to the contract.
But if they leave it alone, the contract's going to just call for whatever it is.
You leave it alone, you get to the full surrender. Once you hit that surrender point, 9 times out of 10, if not even more, you are no longer working with that market value adjustment, and you get the interest rate that you purchased and were guaranteed in the first place.
Because you represent so many carriers, and I really think about this, when you think about all the insurance companies that Brokers Alliance represents, and you look at, we have a kind of objectivity that most people don't see, which is why a lot of advisors, thousands of advisors, play in our pool of annuity programs and annuity policies and ask us for our opinion on carriers and rates and all the policy provisions and perks. Are they good or bad? Are they worth it? And we always say, well, we don't know what your client's timeline is. We don't know what their financial goals are. We got to know all that. And we provide for our advisors, of course, a detailed fact finder so you can walk your client through a gauntlet of questions so that we can position your client for the best possible guaranteed. And because if you're coming to us on the annuity, there's something about guarantees and tax advantages.
Absolutely right. We provide not just a list of questions to ask, but actual forms that will help you work with your client's budget needs. A lot of times we have to identify things that are potentially, and I use this term a lot, the fantasy versus the reality. You know, we have to look at the goals we're trying to achieve and see if they're even possible. And so not just the fact finding, but budget worksheets, a variety of different calculation and financial tools to help the advisor work with the client to identify, can we even meet your goals, and of course, what are your goals and what is your timeline?
Well, I've seen more and more advisors as they're moving, some advisors are moving away from traditional stock and bond portfolios because their clients are calling for these products. And even though maybe the rate of return is pretty low, at least the rate of return of my actual money that I deposited is coming back. You know, I'm at least getting my deposit back. So if I was sitting at a regular guaranteed, if I've understood you correctly, I'm at 1.5 on a 5-year, which again doesn't sound like a big number, but if I'm not getting any more from a bank, the difference there is I don't have taxable event until I use it.
Exactly. You have the tax deferral advantage of the annuity itself.
And are these annuities, do they work the same as any other annuity, which is I can do a payout, 10-year payout, or a 20-year payout, or an annuitization? Does it have withdrawal privileges? Can I take some money out without incurring a charge?
Absolutely. The annuity products that we provide access to will always have a feature similar to what you find on just about any type of investment. There's some liquidity available. Most annuities you'll find that there's a 10% free withdrawal, which means we can take 10% of the contract out on an annual basis and not pay a surrender penalty. You are exposed to potential ordinary income tax at that point, but the idea is that you have access to a portion of your money.
If you don't use your privileges, do any of these contracts allow you to accumulate your withdrawals?
Absolutely.
Well, like how far up the food chain? Like if I don't take my money out the first year, the second year, the third year, I'm not exercising my privilege to take 10% out without any penalty.
There's an insurance company we work with that is actually local here in Scottsdale. They're called Sagicor Life.
Boy, build those guys. Every time you mention
great little company. I'm trying to earn the show a little bit of cash.
All right.
But this company will actually let you get up to as much as 50% liquidity by year 5. So if you wait 5 years consecutively, you'll have the possibility of potentially taking out 50% of the contract without surrender penalty. So
well,
that's
like
pretty
that
significant.
Because if you don't use it, you don't lose it.
Exactly right.
Which is the other ones are kind of just 10%, and that's just the way it is.
Right.
But this allows you to accumulate your withdrawals. Now, on our clients, and I just want to keep this in mind in case somebody missed yesterday's show, this is all providing you're under 59.5.
That's right.
Right? I mean, because if you're under 59.5, well, then I got an issue because the government imposes a 10% penalty on annuities that are exercised. Now, is there any way of getting around that? Could you annuitize before 59.5? But
you can. There are people out there that do retire before 59.5, and of course the IRS has come up with some provisions that allow them to take payments, but there's a very specific calculation involved, and it has to do with the type of income that you make. And when you choose to take income prior to 59.5, sometimes you're locked in for a certain type of payment for a set number of years, or until you reach retirement age. So this is a part where it's not just an easy calculation. There's some very specific math involved. I would definitely encourage every advisor and consumer to work with us to determine what that exact number would be if they're in a scenario where they need to take the money early.
In the first segment, we were talking about market value adjusted annuities. We were talking about 1 year, 3 year, 5 year, but now do we have the same issues here or a little different?
It's a little different. It would depend on, again, what type of product are we working with, and are we annuitizing the contract, taking a systematic stream of payments, or am I just going to pull out 10% because the roof caved in or the air conditioner went down in Arizona and I need to cover the expense?
Yeah, we're broadcasting, of course, from Arizona, the surface of the sun. And so we don't know about that now because we're broadcasting kind of in the winter solstice here, which is like, what, 72 degrees. But, yes, we're going to have to deal with that. Well, when I'm thinking about these two products, they have a lot of G word in it, little guarantees. If I can sit tight, actually the market value issues won't even mess with me, really, if I can sit tight during those surrender years.
Exactly, and that comes with the questions that we ask when we're initially interviewing our clients. The number one mistake an advisor can make is to not ask enough questions. It may seem like you're imposing on your client, but at the end of the day, we're trying to figure out, is this the right move for you? Is this the right choice? If we know clients need liquidity, then we'll create that liquidity and make investments after the fact.
Well, that's what I want to do. I want to be able to measure it. You can call our number, 800-290-7226. We'll measure this for you. We'll do the calculation, whatever you think you need us to do. We'll be happy to do it for you and ask for any of our comparison grids. And if you say, I don't really have a trusted advisor, we might be able to recommend somebody that will be, actually good for what you are. We try to match people up with their personalities, their fit. Everybody doesn't work with everybody well, but we'll try to do whatever we can to try to make that happen. And you can go ahead and write us at thequest@brokersalliance.com, and we'll send you all these grids, which will actually break it down in English, kind of like a Cliff Note version of all this. Kind of a nice a listing out of all the benefits, the perks, the good, the bad. We'll just try to do the whole thing for you. Just go ahead and write us, and we'll take care of that. I really appreciate that. What kind of interest rates? I want to thank Eric Palmer for being on my show. Our sponsor, Brokers Alliance in America, where anyone can go on a quest for financial freedom. So until next time, remember what the good Reverend John Wesley once said. Make all you can, save all you can, give all you can. I'm Steve Savant. Join me next time on my quest for financial freedom.
Quest for Financial Freedom is brought to you by Brokers Alliance, the premier provider of guaranteed and tax advantage products to a nationwide network of financial professionals. Need financial guidance? Call Brokers Alliance. You can request an email link of this webcast at our email address, thequest@brokersalliance.com, or call us 1-800-290-7226. That's 800-290-7226. And join Steve Savant next time on the quest for financial freedom in your lifetime.